The threat of an escalating trade war between the United States and China could undermine the real drivers of global growth, according to the IMF's managing director, Christine Lagarde. But she says it would be a mistake to break down the potential damage based purely on the current tariff threats.
It's not very substantial when you measure in terms of GDP. We're talking about decimals in most cases. What is more important is something that is difficult to measure in the short term, and that has to do with the erosion of confidence. When investors do not know under what terms they will be trading, when they don't know how to organize their supply chain, they are reluctant on investing.
The IMF says technological change has played a significant role in dislocating people from the benefits of global trade. The World Bank is concerned that African countries are not prepared to compete in an increasingly digital economy.
Many of the low-skilled jobs will be taken over by technology. Now, there's also tremendous hope for technology. I think there's tremendous hope that technology could help some African countries, many African countries who hope, leapfrog and go forward and find new ways of driving economic growth.
Jim Yong Kim says the World Bank is studying projects in rural China to increase financial access, including efforts by Chinese tech firms like Tencent and Alibaba to provide low-cost loans to support new entrepreneurs. So both the IMF and the World Bank are talking about ways in which they can begin to explore using high technology like blockchain, not to concentrate wealth, but to distribute it among those who've generally been left out. Daniel Ryntjes, CGTN, Washington.
And Daniel Ryntjes has been covering those spring meetings. He joins us now live from Washington, D.C. with the latest from there. So, Daniel, let's pick up where you left off in that package. Lots of conversations today around tech, and that covers a lot of cryptocurrency issues, from the promise or the lack thereof of smart contracts, all the way to ICOs, initial coin offerings. What were the key takeaways from these debates?
Well, yeah, the digital currency issue is an interesting one because on the one hand, the G20 nations, as you know, have been moving to impose much stricter regulation. We've seen the New York Attorney General move to request from some of these market participants for more information. It looks like they're going to regulate much harder. Here in Washington, financial regulators are taking a very close look at some of the practices, particularly to do with what appears to be equity offerings rather than simply a coin offering. So there's a lot of concern, regulatory concern, about some of the more skeptical practices of basically for people with nefarious purpose to hide money. On the other hand, when you look at some of the technologies that underline them, it holds out enormous potential because of the low costs, because of some of the security measures that are inherently in place with some of these digital technologies. So the IMF and the World Bank are not putting this stuff aside. They want to use it to increase, expand financial inclusion because, as we've just heard, their view is that there hasn't been enough of a spread of the pie. This could help really broaden the access to financial inclusion.
Indeed. There was also something else that we talked about a little earlier in the week. The World Bank warning that there are about 18 sub-Saharan African countries right now that are at high risk of debt distress. Kenya, where I am at the moment, is one of them. You spoke to the country central bank governor. What did he have to say about that?
Yes, Governor Njoroge, we had a very wide-ranging conversation about some of the challenges his country faces, but I got the sense that he wasn't entirely satisfied with the way that the World Bank had positioned Kenya. He says, yes, we are getting close to a threshold where it becomes unsustainable to have levels of debt, but he pointed out that the Kenyan Central Bank has plenty of reserves, so there is that stability. But definitely he was giving the message out there that the Kenyans had to basically deal domestically with the issues that arise. As you know, they have these big four spending priorities, but he said he's going to try to get the private sector to do as much of that work as possible. And here was his overall response to the idea of the inclusion in these 18 countries deemed by the World Bank to be at risk of debt distress.
There's limited headroom for additional debt, and we need to look at other means of financing our expenditures. But the point for us is that the debt is something that we need to deal with anyways. And it is not so much that we should be, we should deal with it only when we cross the threshold.
Indeed, and of course the relevant World Bank numbers that they're warning that by the middle of this year we should be looking at about a debt-GDP ratio of almost 60%. One last question for you, Daniel. So universal financial access, that was one of the World Bank's core goals at the moment. The latest data suggests 515 million adults have opened accounts since 2014. But in the words of the World Bank president, there's still a lot of work to do. Who is being left behind in the race to universal financial access?
Well, 3.8 billion of us have bank accounts or financial accounts linked to mobile technology. That's 69% of the population, but there are 1.7 billion of us who have been simply left out at this point. Many of those individuals actually do own mobile phones, so there's a great opportunity there to increase financial exclusion. But to those left out, it's poorer nations in Central America, Sub-Saharan Africa, North Africa, where the concentrations are highest, and also there's a gender disparity. Many more men have access to financial accounts. So there's a lot more work to be done, Rama. But certainly, as I said, there's a real feeling of optimism here that some of these financial technologies can really help to narrow that gap and to reach the goal of 100% financial inclusion at some point in the next few years.
Indeed, we'll leave it there for the time being. Thank you for the update. That's Daniel Ryntjes, of course, live in Washington, D.C., part of the team that's covering all the debates, all the ideas, all the content coming out of the spring meetings of the IMF and the World Bank.